Namaste and welcome to this Gepl Capital Explainer. We're diving into something absolutely crucial for your financial well-being today, your mid-year portfolio review. Think of it as your 2026 financial health checkup. Let's look at how to secure your wealth and realign your investments mid-year, totally free from panic. I mean, half the year is already behind us. It really flew by, didn't it? But here is the most critical question you need to ask yourself right now. Is your portfolio still moving in the right direction? We're navigating a very specific environment in 2026. We've got shifting interest rates, lingering inflation, eating into purchasing power, and of course that continued FI selling. With all these moving parts, you really have to ask if your hard-earned investments are still perfectly aligned with your ultimate financial goals. Okay, let's dive into this. A portfolio is not a set it and forget it kind of thing. Before you start asking anxious questions like, should I invest more rupees right now, or should I just exit entirely? We need to stop guessing. We need to review and realign. We just have to make sure your investments stay carefully calibrated to your timeline and your risk appetite. Section 1. Why review your portfolio now? Let's talk about navigating the 2026 Indian market. So here's the reality. Your goals change, markets change, and naturally your risk levels shift too. As Indian investors in 2026, we are dealing with a really complex mix. We've got global uncertainty, inflation, crude oil movements, and FII selling pressure. If you just leave your portfolio unmonitored, it's inevitably going to drift away from your original strategy because of all these external forces. Section 2. Focus on goals, not returns. What's the real purpose of your investment? And this brilliantly illustrates a massive trap that so many investors fall right into, reviewing just one single metric, the return. They see a drop in value and they instantly react. But the Gepl capital approach looks at the entire picture. It's your goals, plus your risk, plus your time horizon. We absolutely have to guide ourselves away from the anxiety of just checking profit and loss and steer toward making smart, goal-based decisions. Ask yourself this right now. Is every single rupee you've invested actually linked to a clear goal? Think about it. Capital that you might need for a short-term emergency in the next few months requires a vastly different, way more conservative strategy than the money you're confidently locking away for a retirement that's 15 years down the line. Section 3. Check your asset allocation. Are you actually still balanced? You see, your original portfolio might have been perfectly balanced across equity, debt, gold, and cash. But after months of market movements, that perfectly sliced pie probably looks completely different today. Like if equities rise sharply, your portfolio is suddenly way more aggressive than you originally planned. These automatic shifts require proactive realignment to make sure your money is distributed safely, completely in line with your personal risk tolerance. Section 4. Uncover hidden portfolio risks. Let's look beyond the surface. A portfolio might show fantastic returns on the surface, but it could be carrying dangerous, hidden risks because of overconcentration. Are you holding way too much in just one stock, or one sector, or theme? Just look back at May 2026. Even seemingly invincible Nifty 50 companies saw significant value erosion because of valuations and foreign outflows. It's a stark reminder that while diversification doesn't eliminate risk entirely, it definitely stops a single asset's poor run from sinking your entire wealth. Section 5. Don't ignore debt and liquidity, the stable side of your portfolio. Now, what's really interesting about this slide is that equity usually gets all the glory, right? But a true mid-year review demands serious attention to the unglamorous side, your debt portion. We have to look at how shifting bond yields and interest rate expectations directly impact your debt funds. With recent reports showing rising long-term yields, it is absolutely urgent to reassess the duration risk hiding inside your debt portfolio. You need to ask yourself honestly, do I have enough liquidity for emergencies? Have I actually adequately separated my short-term cash needs from my long-term investments? This stable side of your portfolio plays a totally non-negotiable role in your overall safety net. Section 6. The mid-year review checklist. Remember to rebalance and don't react emotionally. Reviewing your portfolio does not mean selling everything in a panic. Not at all. It means making sensible, disciplined adjustments. It's really a 3-step process. First, review your alignment. Second, realign your weightings to adjust for any overexposure. Third, rebalance to restore your intended mix. Be act with discipline and be certain do not chase fading social media trends. Here is your definitive diagnostic tool for the rest of 2026. Rapidly run through this 8-point checklist. Verify your goals, spot any overexposure, check if short and long-term names are separated, and make sure you thoroughly understand the tax impacts before you redeem anything. It's basically your ultimate roadmap, and it helps you know exactly when you might need to seek some professional guidance. Ultimately, a portfolio review isn't about perfectly predicting the market. It's about preparing for your unique journey. Markets are going to move, and the news cycle will keep spinning. But if your portfolio drifted 10% off course today, would you even know? So review today, realign wisely, and make sure to follow Gepl Capital for more insights to stay informed before you invest. Please note, this explainer is for investor awareness and educational purposes only and is not investment advice. Please consult your financial advisor before making any investment decisions, as past performance does not indicate future returns. Thank you so much for joining us today.